The rupee has been having a torrid time of late, plumbing new lows against the dollar on a regular basis, and today's on track for its worst performance in almost 20 years. And it's not just the Indian rupee that's having troubles. The Indonesian rupiah and the Thai baht are also under pressure. With me today to discuss this is the FT's Asia editor, David Pilling. David, thanks for joining us.
Thank you.
Let's start with the rupee then.
Yes.
What's happened?
Well, today I think there's nervousness about the Syrian situation and what that might do to oil prices, because India is a big importer of oil. But this is really just the latest. I mean, India has been, as you say, under the cosh since May, really since Ben Bernanke started talking about tapering, the possibility of US interest rates going up. India's problem is that it runs big current account deficits. It's also got a big fiscal deficit. And the concern is that it needs these inflows of money to be able to bridge the gap. Once this money begins to leave the country, then that puts enormous pressure on the currency. And that's what you've seen.
Is India the worst case, the basket case of all the emerging markets, or is this a bigger problem that is affecting everyone?
Well, it is affecting everyone. I mean, I think there is a particular focus on India. Growth has slowed there enormously over the last 2 years, practically halved. There is a lot of market unhappiness about the slow pace of reform, even the kind of reversal of reform. As I say, it runs this big fiscal deficit. It has big subsidy programs that the markets just kind of think India can no longer really afford. So India seems to have its own particular self-inflicted problems. But as you say, there is a much wider emerging market story as well, because of what seems like a change in the interest rate environment that is affecting all sorts of economies around the world, emerging markets, especially those that have big current account deficits, and therefore nervousness about where the funding to plug those holes is going to come from.
So are there any comparisons then with the last major Asian crisis in 1997?
Well, inevitably there are comparisons. People do look back to the last major crisis that we've seen in this region, but there are big differences. Back then there were fixed exchange rates, countries had low reserves, and they had, certainly in retrospect, weak banking systems. And now they have much higher reserves, they have stronger banking systems, and the exchange rate, as we've seen in the case of India and in Indonesia and some other countries, is not fixed. The currencies are falling precipitously, and one could say that ought to be a sort of a safety valve. The problem before was that you had companies that had borrowed in foreign denominated debt thinking that the currency would be pegged. When it wasn't, they really suffered. Now we hope that there aren't companies that have made that same mistake. Of course, the fear is that no crisis really repeats itself in exactly the same way. So the fear is that there may be something else hidden in the system. Perhaps there are companies in some countries that really do have unhedged foreign borrowing. Perhaps some banking systems are a little bit weaker than we thought. So I think people are nervous and they're waiting to see with this kind of testing of these economies, will one of them fall, or will they actually be able to ride it out?
So is this then a crisis that's been made in the US?
I think the US interest rate environment is the big trigger. I think there are other factors as well. The slowing of China is one, and therefore the weakening of the whole commodity supercycle. And I think there's also an element of people thinking, well, look, Asian economies have done extremely well. They rode out the 2008 global financial crisis. But a lot of that was built on credit. A lot of it was built on this money that was flowing from the United States. Now this money's flowing out. I think the markets are going to look at some of these economies much more closely and think, what really were the fundamentals there? Are some of them not really as strong as we imagined them to be? And so I think that these countries, these markets, face a period of scrutiny that they really haven't had for a little while.
So emerging markets are facing something of a reckoning then. David, thanks very much for joining us. And you can read more about this in tomorrow's newspaper or at ft.com/analysis.